Millionaires are made when the stock market crashes. The bigger the crash, the bigger the opportunities, especially if you can stay greedy when others are fearful, according to famous billionaire Warren Buffett. Right now, Trump's aggressive push for renewed tariffs is shaking up global markets, and while most investors are running for cover, the smart money is quietly preparing for one of the biggest wealth transfers in modern history. These aren't just headlines, these are signals. Every time tariffs go up, certain industries get crushed, but others explode with opportunity. In 2025, we're not just looking at a trade war. We're staring down a complete reshaping of supply chains, manufacturing, and tech innovation. From AI-driven chip makers to domestic energy and blockchain infrastructure, the next wave of millionaire investors will be the ones who understand where the disruption creates growth. In this video, I'm going to break down exactly how this shift is happening, which sectors are about to pop, and the specific stocks that could turn today's fear into tomorrow's fortune. If you're tired of sitting on the sidelines while the market moves without you, now's your chance to make bold, informed decisions. But before then, kindly help this video to get 500 likes, share, and subscribe to the channel for latest market insight and opportunities. Now, let's begin. The first stock on my list to make potential millionaires in 2025 is AGM Group Holdings ticker symbol. AGMH operates at the intersection of cryptocurrency mining, blockchain technology, and digital asset services, three sectors with high growth potential in the evolving digital economy. With active mining operations in Texas and Kazakhstan totaling 350 PHS in computing power, AGM has positioned itself to benefit from both Western and international markets. Although the company recently reported a net loss of $7.44 million and has seen its stock decline over 96% in the past year, this significant pullback creates a rare entry point for high-risk, high-reward investors looking to capitalize on a turnaround story. The Trump-era tariff war and ongoing geopolitical tensions may pose challenges to many China-based firms. Still, AGM's growing operations in the U.S., particularly in Texas, a crypto-friendly state, serve as a strategic buffer against supply chain risks and regulatory uncertainty. AGM Group Holdings, AGMH, is currently trading at $0.0486, down a staggering 98% year-to-date, following a 52-week low of $0.06 and a heavily dilutive public offering at $0.33 per share. Despite these setbacks, the stock presents multiple speculative opportunities. Technical indicators suggest AGMH is in oversold territory, indicating a potential short-term rebound. The company has until September 9, 2025 to regain compliance with Nasdaq's $1,000 minimum bid rule, with a possible 180-day extension if other criteria are met. With the upcoming Bitcoin halving, AGMH stands to benefit from increased mining revenue, while its mining operations in Texas give it strategic leverage amid U.S.-China tensions. Its focus on blockchain technology aligns with broader adoption trends across finance, healthcare, logistics, and AI-driven systems. The global shift toward digital currencies also supports its core business model. As ESG investing gains traction, AGM's potential for energy-efficient mining partnerships offers added appeal. If the company restructures effectively and capitalizes on these trends, it could shift from a micro-cap risk to a tech-forward growth asset. For investors willing to brave short-term volatility, AGMH holds the potential for outsized long-term returns, especially if positive news or developments trigger a short squeeze. The next stock on the watch list is revolutionizing the fintech space. SOFI Technologies, ticker symbol SOFI. This stock has recently appeared on our channel before the market crash following tariff war. SOFI still remains one of the most searched stocks. Therefore, you might want to consider some of the key factors that could influence the stock's performance in the near future. Over the past month, shares of this company have returned, up 10.2% compared to the Zacks S&P 500 Composite's 5.1% change. During this period, the Zacks financial miscellaneous services industry, which SOFI Technologies falls in, has lost 7.2%. The key question now is, what could be the stock's future direction? While media releases or rumors about a substantial change in a company's business prospects usually make its stock trending and lead to an immediate price change, there are always some fundamental facts that eventually dominate the buy and hold decision-making. At Zacks, we prioritize appraising the change in the projection of a company's future earnings over anything else. That's because we believe the present value of its future stream of earnings is what determines the fair value for its stock. Our analysis is essentially based on how sell-side analysts covering the stock are revising their earnings estimates to take the latest business trends into account. When earnings estimates for a company go up, the fair value for its stock goes up as well. And when a stock's fair value is higher than its current market price, investors tend to buy the stock, resulting in its price moving upward. Because of this, empirical studies indicate a strong correlation between trends in earnings estimate revisions and short-term stock price movements. For the current quarter, SOFI Technologies is expected to post earnings of 0 per share, indicating a change of plus at 50% from the year-ago quarter. The Zacks consensus estimate has changed 5% over the last 30 days. For the current fiscal year, the consensus earnings estimate of $0.25 points to a change of plus 66.7% from the prior year. Over the last 30 days, this estimate has changed 4.4%. For the next fiscal year, the consensus earnings estimate of $0.49 indicates a change of plus 98% from what SOFI Technologies is expected to report a year ago. Over the past month, the estimate has changed 5.8%. Having a strong externally audited track record, our proprietary stock rating tool, the Zacks Rank, offers a more conclusive picture of a stock's price direction in the near term, since it effectively harnesses the power of earnings estimate revisions. Due to the size of the recent change in the consensus estimate, along with 3 other factors related to earnings estimates, SOFI Technologies is rated Zacks Rank number 3, Hold. While earnings growth is arguably the most superior indicator of a company's financial health, nothing happens as such if a business isn't able to grow its revenues. After all, it's nearly impossible for a company to increase its earnings for an extended period without increasing its revenues. So, it's important to know a company's potential revenue growth. For SOFI Technologies, the consensus sales estimate for the current quarter of $742.34 million indicates a year-over-year change of 7.9%. For the current and next fiscal years, $3.21 billion and $3.82 billion estimates indicate plus 23% and plus 19.3% changes, respectively. SOFI Technologies reported revenues of $739.11 million in the last reported quarter, representing a year-over-year change of plus 24.4%. EPS of 0.058 for the same period compares with 0.02 a year ago. Compared to the Zacks consensus estimate of $679.31 million, the reported revenues represent a surprise of plus 8.8%. The EPS surprise was plus 25%. Over the last 4 quarters, SOFI Technologies surpassed consensus EPS estimates 3 times. The company topped consensus revenue estimates each time over this period. No investment decision can be efficient without considering a stock's valuation. Whether a stock's current price rightly reflects the intrinsic value of the underlying business and the company's growth prospects is an essential determinant of its future price performance. While comparing the current values of a company's valuation multiples, such as price to earnings, PE, price to sales, PS, and price to cash flow, PCF, with its own historical values helps determine whether its stock is fairly valued, overvalued, or undervalued. Comparing the company relative to its peers on these parameters gives a good sense of the reasonability of the stock's price. SOFI Technologies is graded F on this front, indicating that it is trading at a premium to its peers. The facts discussed here and much other information on Zacks.com might help determine whether or not it's worthwhile paying attention to the market buzz about SOFI Technologies. However, its Zacks rank number 3 does suggest that it may perform in line with the broader market in the near term. But before on to the third stock on the list, let us know your take on comment section and do well to like and share this video to help grow our YouTube channel. Thank you. Cadence Design Systems, NASDAQ CDNS, currently trading at $289.63, remains a high-potential tech stock that continues to redefine the semiconductor design space, even as global trade tensions, including the Trump-era tariff war and its potential resurgence, reshape the tech supply chain. Originally known for its cutting-edge tools to design and verify semiconductors and systems, Cadence has strategically expanded into AI-driven design automation through its Agentic AI platform. This shift isn't just timely, it's visionary. In March, Cadence deepened its partnership with NVIDIA to integrate Agentic AI with the powerful Blackwell GPU architecture. The result? A 10x acceleration in its Spectre X simulator and the ability to run multi-billion cell simulations in under 24 hours, a task that used to take a top 500 CPU cluster several days. This kind of performance leap is crucial as chipmakers seek speed, efficiency, and innovation in an increasingly fragmented global market. Amid rising tariffs and possible U.S.-China decoupling, Companies like Cadence that offer software and simulation-based design rather than relying on hardware supply chains stand to gain. Cadence's operations are primarily US-based, shielding it from the direct impact of foreign tariffs and giving it a strategic advantage as more semiconductor companies look to onshore or nearshore operations. The company is already seeing strong traction, with projected 2025 revenue between $5.14 and $5.22 billion. Though it trades at a premium valuation, 15.3x sales and a PE of 67.22, this reflects investor confidence in its ability to dominate in high-growth markets like AI chips, autonomous systems, and smart data centers. Moreover, Cadence's recent launch of the world's first DDR5 12.8 Gbps MRDIMM Gen 2 memory IP system directly addresses the surging demand in AI computing and cloud infrastructure. As geopolitical uncertainty forces tech companies to seek faster, more secure design cycles, Cadence offers a rare solution: US-anchored innovation with global relevance. Institutional investors are already locked in, holding over 86% of the stock, and analysts project a 12-month target of $324.83, implying further upside. Add in the fact that any future tariffs on chip production could push more firms toward AI-accelerated design solutions like Cadence offers, and you have a stock that not only survives uncertainty, it thrives in it. For investors seeking to future-proof their portfolios, Cadence presents an exciting, resilient, and tech-forward opportunity.